Hi there, Serial Trader here. Let's have an update on Facebook as I think it shaped up quite nicely since the last video. Now, if memory serves me right, in the last video, it was fairly shortly after we had this huge drop after earnings and quite a historic drop. I think it was the largest market cap loss in a single day on individual stock in the history of the stock market. So, certainly not a good day for Facebook longs. But that being said, I pointed out at the time that, well, it could lead to another buying opportunity. It depends what kind of pattern we form. Obviously, at that point, there really was no pattern to analyze. We just had this straight drop down. So we had an initial move down. We had our fairly typical partial retracement of that move. And from that point, we've had a third leg down. And that third leg down has developed in a 1, 2, 3, 4, 5. So it can be counted as complete to the downside. 5 waves down for wave C, minor wave C. Okay. And this is all probably part of a larger fourth wave structure, although I don't have that labeled here. It's not really important from the trading perspective currently. So minor wave A down, ABC up for minor wave B up, and then like I said, just 5 waves down for wave C. Now, obviously we can't label 5 waves down for wave A because there's just not enough price data with that huge gap to label that. I haven't looked in after hours action. Not really that important. The point is a nice corrective looking 3-wave decline, and importantly, we made a higher low above the previous 3-wave decline we had over here, which I also pointed out at the time was likely a good buying opportunity, and it certainly was as we impulsed up the new highs afterwards. And that low was 149.02. So around 149. We've made a higher low so far at 158.87, so looking good. We also had some on the daily chart here, bullish divergence on our MACD moving averages. So you certainly want to see bullish divergence on an indicator if you're working a significant bottom. So we have that, so check mark. And RSI got nice and oversold, obviously on that initial drop, recovered, and ran into resistance, bear market resistance, or downtrend resistance, if you will. And then we got oversold again. And then I think we had a slight bullish divergence, ever so slight, between this low and then the actual low. So a slightly, lower low in price, but a higher low in RSI, although it is quite subtle. So subtle, I'm not even going to bother drawing the line. So that's good. So we had the bullish divergence in RSI when we formed our bottom. And if I go with the candlestick chart, I do believe, yes. So we had our bearish engulfing candlestick after a little pop-up off the bottom. That looked pretty ominous at the time. Looked like a resumption of the downtrend was ahead. And then we opened lower, certainly. And then we had this piercing candlestick. So if I zoom in, we had a piercing candlestick where you retrace at least 50% or more of the previous bearish day after opening much lower. And we retraced more than 50% of that and closed near the high of the day. So that was a nice piercing signal. And then we had some good follow through. So 3 strong days up. We had some bullshit news come out on Friday. We dropped us down there. Actually closed below the T line, but a bit of a lower shadow of dip buying on pretty high volume. So we're in an interesting position here. I like the idea that we have a hard low in Facebook and that we'll be progressing now in a new impulse wave to new highs, and to express that as a trading idea, I bought some December 170 strike Facebook calls. So obviously you have to be long against this level 158. That's a must hold. 158.87, that's your must hold level. Really, I wouldn't actually want to see that piercing candlestick level get taken out, which is a little higher than that. So the low of that piercing candlestick was 160.88. So let's just call it roughly 160. We want to see that hold moving forward, and ideally we come right back after this short-term sell-off on the news there. Also, I think I want to point out the weekly chart, some good RSI signatures here. So on this previous decline, which at the time was from an all-time high, so when we went from 195 down to 149, our weekly RSI fell into that bull market support range. I believe we hit right around that 40 level, high 30s, so 37 by the looks of it, 38 almost. And now on this decline, which we've made a higher low on, as I pointed out, RSI has declined. So on the actual low, where were we on RSI weekly? 39 and change, almost 40. So I'm liking that we're holding that RSI bull market support range on the weekly chart. And you can see this actually dates back over here as well to this pullback. And where do we hit RSI there? We hit, 42, so low 40s. So that seems to be a nice support area for weekly RSI. We haven't broken that here. We're largely holding. So I'm definitely liking that we have a pivot. We have a complete ABC down, three-wave decline zigzag, and now we're finally going to be working another impulse wave to the upside. So pretty clear here. Your risk is relatively small. So right now we're currently trading at 164, bullish against 160, or if you really want to give it the benefit of the doubt, bullish against 158. And if it proves to be correct as the weeks and months progress, should be knocking on the door of that 218 all-time high, and likely much higher. And in fact, we'll do our reverse Fibonacci of this overall three-wave decline. Give us some targets here, and the 1.382 target comes in at 241.45. The 2.0 target comes in at 278.37. So pretty huge upside compared to the small risk you'd be taking getting in at current levels. So definitely liking that. Nice trade setup. Definitely felt compelled to share that one. All right, well, we'll see how Facebook progresses. Hopefully we can get off to a good run this week. All right, Serial Trader signing off.